Thank you all for joining us for another Fintech Talks, Georgia Fintech Academy podcast. Today we are here in New York City participating and celebrating New York Fintech Week, and I thought what better opportunity is there to really bring together some industry insightful leaders that have various perspectives on financial literacy and inclusion for a topic that we are calling today Closing the Gap, the next frontier of financial inclusion and literacy in the digital economy. And so I'm so glad to have you guys here with me today.
Thank you.
And we're going to spend a few just letting our audience get to know you as individuals, share a little bit about yourselves, your background, and then maybe something that has drawn you into the financial literacy and inclusion space.
I'll start. My name is Ariel Serber. I'm an advisor here with a firm called Lions Financial. We help individuals, businesses sort of line up where they are, where they're trying to get to financially, and then support them on their way, on their path. So my start really was in the personal financial space, financial advisory. Really, it came because of how I grew up in my family, and some of the decisions or lack of decision making that there was made me want to say, okay, how can we do this a little bit better, which we can get into going forward. Thank you.
Yeah, no, I love that. Happy to be here. Thank you so much, Laura, for including me. My name is Estiverne-Colas. I'm a 20 plus years experience in financial services, and half of that has always been with the fintech. And, you know, I'm on the board of NAFLI, it's National Alliance for Financial Literacy and Inclusion, and I'm a founder of AG Advisor, so I work with a lot of fintechs and startups. But financial inclusion is a special topic to me because I've always been behind the scenes building products and services for all different communities. And, you know, the way I see financial inclusion is all about access, right? Access and the literacy is all around education, and sometimes that doesn't marry really well, right? We have individuals who lack access to information to be able to provide the right options and the decisions. And you know, I'm a Haitian descent, right? I come from a two-immigrant, family home, and you come to this country, and it's really important to like settle and really assess your financial empowerment by understanding what options are out there. So it's something that's personal to me because it's something that I have to work through as, I focus on generational wealth with my children and things like that. But having my expertise be able to aid in education is really why I'm passionate about this space.
So now I have to go after all that. I'm Castleigh Johnson. I'm the founder of My Own Pathway. My background is in financial services as well. 15 years of banking. I was a banking examiner at the New York Fed, Goldman, AIG, and Ernst & Young. A lot in the risk space. So at the end of the day, access sits on the back of risk and how risk is assessed. And a lot of times consumers don't know what they look like from a risk perspective. And so then how can you really, put yourself in the best foot forward? And if you kind of look at a lot of inclusion metrics, right? When people talk about wealth gaps, income gaps, et cetera, home ownership gap, for example, we're working on, they haven't really moved in the last 50 years. And there's a lot of programs out there, whether financial services, whether nonprofits, but they really haven't had the impact that they need. And so how do we leverage technology to also address some of these things? And how do we make financial literacy and education simplified enough so that the people get it and absorb it into habits? And a lot of times you'll have financial services executives or teams that provide content in a way that's built for people that understand finance already. So is it impactful for the people that really need it is a lot of the challenge, and they don't really measure that. The only way you can measure that is by outcomes. So that's a part where it's disconnected between financial literacy and outcomes, is how do we actually tailor all of this thing together so that it moves in needed for folks that truly need it. So that's really what my focus is and what I'm passionate about. I'm also an immigrant, born in Jamaica, came here, knew nothing about finance, and had to learn. The first real big lesson for me was actually my mom tried to buy a house, and I had to read her note and her deed. And so I remember printing that out. It's 300 pages back in the day, and taking the notes in the corners and sending the emails to the guy, the mortgage guy, what is this? Explain this to me. And so, that's part of where we need more people to just truly understand the details in finance, but to not be, when folks try to explain to them, not be condescending at the same time, right? Because you're trying to really get people comfortable with these critical decisions.
It's a great segue, into the conversation around where are their challenges and how have you seen there be unique solutions applied in this space. So from a Georgia Fintech Academy perspective, one of our responsibilities is obviously cultivating talent for the fintech space, but financial literacy has to be addressed almost as a prerequisite. We see it across the university system, but then also through the Department of Education at the secondary level, students are at various stages. And to your point, Castleigh, it's one size doesn't fit all necessarily as far as like a one-stop shop solution from a financial literacy perspective. It's an ongoing journey for many. But I would like to hear from you guys on your thoughts on that and, where there are challenges that you've seen and solutions being applied from a financial literacy perspective.
Yeah, I'll go. So I actually saw something where there was a study done, and it said that if a student took a course for one semester on financial literacy, it equaled over time to over $100,000 in assets accumulated because of that. So how much more could be done if it's embedded? And we talk in fintech, obviously, about embedding products into experiences and user experiences, embedding these types of ideas, theory, and practice into everyday life. I think a lot of it, obviously the financial services firms, their incentives are their incentives, right? I think it really comes down to community level, parenting, the schools, the whole school system, even churches and synagogues, what have you, should really be involved with this whole process because that's where these kids growing up are gonna like each of us have our own, we make our own decisions because of a lot of how we saw things growing up.
Yeah, no, you mentioned the whole embedded finance, and, I've been a payment expert for some time now. And, I've gotten a chance to work on really interesting products. And there's an aspect of risk that we also have to consider. But I do like Ariel's point on financial literacy because if we think about it, this generation is utilizing different tools to be able to access money much quicker. One of the cool products I worked on with a few clients was this earned wage access, right? Getting access to your paycheck at a much faster rate than normal is, that's innovation that provides financial inclusion that this generation wants to tap into much quicker and faster. And then we look at some of these merchants, like I was looking up Lyft. Lyft has its own debit card to be able to pay their drivers. And we have a younger generation that's tapping into making money by doing Lyft or Instacarting and, these things. And they have to understand what are options, products and services that are options to them to be able to access money much quicker. There's also a trust aspect, right, that I think is a constant conversation with a lot of fintechs because fintechs allow that creative solution to approach where maybe you don't necessarily have to have full documentation to be able to gain access to these types of services, but a lot of the sponsoring banks are facing compliant issues. There's, trust and safety conversations that are happening regularly. That's my point of view from a product standpoint. I also look at digital identity, right? Like that is another basic item that is just having your full documentation and opening an account, right? There is a community that's facing a lot of issues around that too. And I guess it's the education on are there options to go around these kind of issues? So it's just interesting.
Yeah, you mentioned students to college. So I started teaching, so that actually the first one about 5 years ago at Penn State for incoming freshmen around financial literacy and engagement. I've done a few others. I actually pitched to the Department of Education 5 years ago about creating a fintech financial literacy course that was leveraging technology for all colleges. And the reason I just gave them simple math. Their default rates, official default rates, because there's some interesting stuff that people do. Their official default rates at the time are say 20% on loans. So the challenge becomes, that's $1.6 trillion, right? Their delinquency rates are. Their delinquency rates are pretty heavy, but there's unofficial delinquency rates too, which is some big difference.
And that was pre-COVID.
Pre-COVID.
Pre-COVID, yeah.
Right? So
Some things have changed.
changed.
Yeah.
The interesting part was if you actually, as Ariel said, if you actually educate students and give them an opportunity to show them how this game works around their personal finance and their credit score and their financial literacy, they're much more likely to do the right thing faster. Something simple as, hey, if you're a student and you actually are paying rent, you can embed rent reporting into your credit score as a trade line, and that's 40 points, right? So
Yes.
think about this. Now you're graduating with a 700 credit score as a student versus you didn't even take these small things that you could have done that improved, or your parents have good credit scores. As you authorized, you should never give you a card. There's simple tricks that colleges can implement, the Department of Education could implement to actually build the risk profiles of these students automatically. So now you have much more well-prepared students. Because before, 50 years ago, you're graduating college with $5,000, $6,000 in debt. Now you're graduating college with $120,000 in debt. It's a mortgage.
Yeah.
And they're not prepared for that truly, right? They're coming out making $60,000, $55,000. You're upside down on the debt, and you never really were taught these things, right? So if you don't come from the right community and have that upbringing where people are teaching you, it is kind of beholden on, educational departments, schools, your community, the churches to help you, but we have to be more strategic. Like we shouldn't just rely on the church is like, hey, that'd be great if your church, your community does it, but you have these students, you have them for 4 years, at least in college, you can literally put courses in and put tools in that can say, hey, these are the tricks, there are 4 or 5 tricks you need to do. You can pay part of your student loan just interest while you're in school.
Yeah.
No, that's great.
And I don't think this is being taught in your typical financial literacy courses that are,
And that should be, I feel like that should be high school level because,
Yeah.
like you said, they're coming out of college with 100,000+ of debt, but they walk into college without an idea of what that would mean to themselves and their career and their family, because it's all about financial freedom, right? So, that's a ball and chain you wear for a very long time on top of everything else, and things are expensive, life is expensive. You might make 60,000, but if you live in a city like New York or wherever, that doesn't really, it's just true. It's unfortunate, but true. So I'm just glad to see, so it's FinTech Week, it's Financial Literacy Month. So I'm glad to see big firms do understand this to some degree, but I think to Amanda's point, a lot more is coming up from the bottom up, and what you're building, Castleigh, so where it actually helps people make these good decisions, come up with good programs for themselves that puts them in a better position to get to where they want to get to.
Yeah.
The only thing I'll quickly say is, information asymmetry is powerful. And if I have 95% of the information, you have 5, what are the chances you're going to really be in any contract negotiation or anything else? So there's built-in incentives to really not educate consumers how they really need to be, because then you'd be educated enough to know that this is a terrible deal.
Yeah.
So many people are in terrible deals, whether their risk profile is high or low. There's just so much when it comes to information power. There's a lot of disinformation as well. TikTok, I love it.
Yeah. Yeah.
I was talking to
It's
some folks
the
last night about
generation.
that. Yeah,
Yeah.
for me, and especially speaking with students at high school and college level, they are inundated with social media and some misinformation. How do they know what's right and what's wrong? And whose responsibility is it to provide that confirmation of this is what you need to do?
Yeah. So it's interesting. A lot, we talk, at NAFLI, we talk with a lot of financial institutions about this, how they want to revamp their financial literacy workshops. Some time ago, maybe 5 years plus, a lot of banks used to go into schools and have a representative talk through opening an account and all this kind of basic fundamental types of skill sets. But this needs to change. A lot of the products and services now are building in-house financial management tools within the apps, right? Where you can check your credit score, where you can budget some of your accounts and things like that. And I think it needs to change. That's what NAFLI is trying to do. We're trying to figure out how can we cater to this generation, because they look at things differently. Just like you said, the social media, they're taking a lot of information that might not necessarily be the right information. And I do think that financial institutions really need to focus on this and really play a hand at this, right? To just not only provide a best-in-class customer experience, but aiding their consumers on their financial wealth as well.
But they're just not good at creating content, and they don't get the flashy whatever. Also, as someone that has the securities licenses and all this stuff, we're talking compliance and registrations and regulations and
The word that you're about to say, right, needs to be passed by legal.
yeah, I got an email. I was at AXA, and I got an email because I liked someone's post on LinkedIn. This is like 10 years ago. I don't know. I mean, things have changed since, but it's like, to your point about who you're racing against or who you're competing against, like you can't keep up with people that are just, reading something off Investopedia, in a flashy way, or just making, or then trying to sell a product like let's say an IUL, and I don't want to get into like what products, but products that are probably not right, but because they pay a commission, so people do what they're incentivized to do.
Yeah, I think the incentive structures are still misaligned in a lot of ways. And so if it's so easy to come up with misinformation, right? Yes, there's so much regulatory burden, compliance, because again, this is what like UDAP and all of this regulatory practice stuff for, so you don't end up being predatory for certain underserved communities or just anyone in general. The other misinformation side doesn't have any of that, right? So they can just come up with something. It's 2 or 3, 5 million people. And people start believing, not everybody's going to believe that, but people start believing some of this stuff, and then you're like, and for a bank to come back and now say, let's say a JP Morgan side, what's the incentive for JP Morgan to say, I'm going to help you to understand that that's not correct.
Yeah.
I have to go through 15 layers of compliance. By the time I get through that 15 layers of compliance, that thing is no longer the trend.
Yeah. Also, it's all about who has the money here, right? So we're talking about Gen Z. They're not the ones, when we talk about wealth transfer, which I think one of you guys touched on, I think it was you. The trillions, was it you?
Yeah,
The trillions in assets that are going to come down. It's like, who has the assets now and for a long time, because longevity and everything else. Gen Z, it's not, again, incentives, right? They're not the ones with the money, so like they kind of get ignored. So those who get ignored get information elsewhere.
Yeah, the baby boomers are sitting on trillions and trillions of dollars. And everybody, again, this is why asset management is also taken off for a lot of financial institutions, right? They want to manage part of those $40-50 trillion in assets.
Yep.
And so, like, they'll cater a lot of their services, their information, everything to folks that have money, right? And yes, there's going to be that wealth transfer, but that's coming down in another 5 or 10 years. And you'll just go after those folks when they have the money. But for right now, it's just incentives. Incentives sit on, either I'm going after $50-40 trillion here, or I'm going after $1 trillion here. The math.
Let's talk about underserved and the trust issue. I think, Amanda, you mentioned trust, and you, Cassie, echoed the same sentiment. How do you address, populations who are just very skeptical of financial, institutions? I've seen metrics, 1.4 billion unbanked across the globe. A big problem here, I think, navigating spaces where there isn't that family structure and community aspect, where they're historically kind of passing down best practices when it comes to financial management. And so how do you address kind of breaking those barriers?
That's a tough question. I feel like no one has an answer.
Yeah, I feel like I've seen, the conversations. We were talking, Ariel, earlier about community and having more dialogue. A lot of folks are having conversations like this in a variety of different platforms. I'm seeing it, in the city hall kind of structure, where folks are, such a diverse population coming in and talking about money. It's been an uncomfortable conversation, especially how I was raised. You didn't necessarily talk about money. You didn't talk even about salary and negotiation. I learned all of that as I developed as a professional. But then you're also seeing a lot of solutions that are coming to the table, to the discussion we were having earlier around solution technically within the fintech space, but then also pairing that with education, financial literacy, and those pieces have to go hand in hand. I love seeing, tools like Greenlight, which is in Atlanta, and it's for the kids essentially there, which is what you guys were all saying earlier in the conversation. But for a lot of the unbanked and the folks that keep the cash under the mattress, it's like, how do you actually help get them, persuaded and build that confidence and trust and that education?
Yeah, Laura, it's just like Ariel said, this is a loaded question, but, we are noticing a lot of fintechs are creating creative solutions around that. Like there's immigrant banks, you mentioned Greenlight, right? Like organizations that are these are fintechs that are, of course they have sponsoring banks that kind of back them up, but this is, a problem that a lot of organizations are tackling, and fintech provides that creative solution. It's just trying to figure out who's the audience that, we're trying to tackle and things like that. A few weeks ago, I went to an event called Just Economy that is an event filled with non-for-profits, policymakers, folks who talk about mortgage lending, small business lending, and there was a conversation around credit access, and there was a gentleman who's creating a fintech around building credit for incarcerated individuals. There's a lot of people that are working on some of these solutions, and they're providing access in just different ways. But the aspect of trust is always in question, especially where we have sponsoring banks that are really taking the grunt of the expenditures on it, right? Like if there's chargeback issues, the compliant issues, it's the banks that are paying for a lot of this. So it's this marriage that we just have to figure out, how do we educate the consumer on options that they have, but then also still being compliant from an FI point of view. I know you're smiling, but this is what the banks are facing.
And also banks are closing.
Digital banking is much more, is open, right? So if you have a phone, which is again, a lot of folks have a phone, you can still participate in financial services versus like, hey, if I live someplace in a rural area, or even again, you have banking deserts in cities. So if I gave Laura $1,000 and I gave Ariel $100,000 or $50,000, and I said, Laura, you only get simple interest. Ariel, you get compound interest. Number run that for 50 years. The first year, I'm like, let me switch that up now. Everything is even. But you got $1 million and you got $6,000 or $10,000. But everything is even on the 51st year. Who am I still giving money to moving forward? $1 million. Like simple math, right? So that's part of the challenge, right? The challenge becomes the government, financial institutions. We've had a terrible history of how we treated underserved communities. VA loans. VA loans for Black folks had a 97% rejection rate, 98% rejection rate for years. Right? So the trust has been not earned for a very long time.
So there's deserved skepticism in the entire system.
And that's what financial institutions.
But even if you look at like roads, and I know we're not getting into like infrastructure, but we could talk about it. But you try going through the Bronx and like, the cross Bronx, and what the story is there.
So again, there's a lot of the trust that you bring up is because of our history, right? And it's generational. Yeah. Because again, we go all back to Freedman's Bank. What happened there, right? Tulsa. What happened there? The bank was like, I have records no more. All of these things kind of chip away at financial services trust, and we haven't. So technically, we got rid of redlining in '68, right? We had 43% Black ownership, give or take. You know what our Black ownership rate in 2025 is? 43%. And we got rid of redlining, and we have Community Reinvestment Act, the CRA.
Yeah.
So technically, if a bank takes my money, they're supposed to have to lend in the communities that they take deposits from.
Yep.
That still hasn't worked. Because CRA has to be enforced, and there hasn't been a lot of enforcement around CRA. The only thing CRA can do is stop you from making another acquisition. It doesn't really stop you from growing. Right? So the way in which banks and financial institutions have to think about re-earning trust from certain communities is have to look at the history of a lot of communities' impact overall, right? Regulators, financial institutions, policymakers. So we kind of like break this thing like, some communities don't trust. No, there's a reason.
It's embedded, as you said.
It is something that's interesting because they do say that there's stats where a lot of people are banking with the community banks, the regional banks versus the large banks, because there is a process of, getting to know the consumer and things like that. So I definitely see that, but there still is a lack of trust within this industry that is prevalent within the consumer.
I grew up with a community bank where I saw them everywhere. They were at the festival, the fair.
We've somewhat addressed that now with, non-discriminatory lending and account opening, all that stuff.
Yeah.
But we still got a ton of work to do, right? There's some subliminal after effects of some of our history that we really haven't addressed. And so I think for all folks in all financial services spaces, we truly have to kind of peel that onion back a little bit and say there's a reason for all this stuff. It's not we just don't want to trust folks.
And at the same time, it's only been since 1974 that women could open a bank account or a credit card, or maybe both.
I think it was both.
By themselves. It feels like things have progressed, but to your point, Castleigh, it's the starting line was different.
I still remember, exactly. Oh my goodness.
You say still remember, a lot of stuff still happens today.
Yeah.
So when you say still, there's a bunch of stuff, people still getting caught for redlining and stuff today. So yes, it's the fabric of how we execute have to be truly transparent with.
Yeah.
And we have to be able to truly be able to address the issues when they do come to light, right?
Sure.
And so now this happened 50 years ago, no bro. This is happening right now.
Yeah.
So we got to address what's happening right now to make sure that we can provide truly equitable access to everyone.
Perfect. All right. So as we wrap up this conversation, so many valuable insights today. I would love to hear from each of you. What are you hopeful for seeing change in this arena, and what gives you hope?
Start over there.
Hope. I think what gives me hope really is folks like yourself, conversations like this, people that are truly focused on moving the needle in terms of outcomes. I think a lot of times we'll have a great policy written down and really implemented, good conversations. But the thing that gives me hope, there are some people that truly want to move the outcomes and are truly looking for good partners and truly looking at solutions that are not just for PR. Because a lot of stuff is great PR, never gets implemented. We have some things, for example, on the mortgage side, it's called special purpose credit vehicles, for example. They're supposed to help with down payment, but a bunch of institutions set them up and never actually issue any money out of them, or very little money out of it, right? Yeah. So I'm super hopeful for organizations that are all right, we want to do something and we're actually going to put our money where our mouth is. I think that, I guess, what gives me hope is just, again, conversations like this, people like yourselves that are, really open to bring in innovation to, spaces that need it and that have such impact, that can have such impact for so many people, talking millions of people that can be positively impacted. That gives me hope.
Yeah, I share the same sentiments, right? I'm excited that, especially being someone behind the scenes and working on the modernization piece of payments, that we continue to be creating inclusive products, right? And really trying to think of the overall consumer. There's a lot of things that are happening around our environment, right? Our economy, with the politics, but maybe this is the time where folks are paying attention. And this is the time where we need to speak up about some of the items that we're creating, some of the services that we're creating. And we just need to have more crusaders behind the scenes speaking up for the person who's, tackling the way money access to financials is for them. So I'm hopeful that we're having these progressive conversations and that we're doing something about that, right? Building the products and services that will aid to a community of all.
So what gives me hope is that we're not settling for letting things be how they've always been or how they kind of are, and that people do use their voices. I was at X Prize yesterday where they gave nice prizes away for climate change related startups. And so I feel like just as the environment is obviously super important, but how we make our financial decisions every day, that impacts each of us literally every day and for the rest of our lives and our families and our businesses and communities. So yeah, having these conversations, doing these events, meeting people where they are. I know we talk about technology and we didn't even touch on AI, which is great. Next time.
Same marketing.
Cool.
Yeah.
Cool. But A lot of the financial services firms talk about personalization or the technology
Yes.
being about personalization, but
Right.
the technology is worthless without the actual person and the people. So it's people like you guys, people like Nicole Casperson, Ashley Fox, and a lot of others, Tyrone Ross. I mean, I could name a lot of people. But the key is find your person or your people in general, but also specifically that you look to for some guidance, like a rabbi, a guru, whatever it might be.
I love that.
Yeah.
This was such
What
a
about
great
you, Laura?
conversation.
Yeah.
You ditto on everything that you guys said. I think what gives me hope, I mean, the Crusaders comments,
Yeah.
the fact that we have, folks out here that are not willing to tolerate, I think, the norm and break the molds. The folks who are innovating and bringing creative solutions to the table. And it's so funny you mentioned the example of those who are formerly inmates and having unique challenges. It's just kind of addressing certain segments based on the personal approach that people are willing to take. And I'm really enjoying seeing that across the industry. So you guys definitely wrap this up with a positive kind of note. I know we were kind of getting into the problems and the challenges and some of the things that we're seeing in this space, but I'm definitely optimistic for the future, and obviously having people like you guys that are out here championing for the betterment for humanity is really exciting to be a part of. So thank you guys for coming today. And for the folks that are on the line listening in or watching this podcast, I recommend to connect with these individuals. We will have their information in the show notes as well as the organizations they also support to get connected in there. Please continue to follow the Georgia Fintech Academy. We are constantly putting out content just like this, having meaningful conversations for our entire community. And so thank you guys,
Thank you.
and thank you for listening in.
Thank you very much for having us.
Yeah, so it's great.